Welcome to Volatility 411 for Equity Armor Investments. I am Joe Tigay here on the floor of the SIBO in the VIX pit on the second consecutive day of heavy selling pressure. Yesterday, the S&P 500 broke through the potential support area, the 50-day moving average. Below that, some people seem to tend to worry to the downside. Are we going to go down, touch the 200-day moving average, or worse? So yesterday we're down 1%. Today we're already on the low, already down more than 1%. So heavy selling pressure, and certainly we're seeing a big increase in the VIX. The VIX on its high this morning was above 2060. The front month future, October future, 1975 on its high. So certainly elevated levels there. The VVIX, the volatility of the volatility, has been around 105. That's elevated, but like the VIX at 20, the VVIX, we've seen a lot higher in those indices. So those still have room to the upside. And it doesn't say to me panic or fear anytime soon. Now, yesterday in the VIX pit, the big trades of the day were people coming in, customers coming in, selling puts in October and November and December, telling me that people are expecting elevated volatility levels to remain for some time. The trade of the day today is people coming in and selling calls. Perhaps that's why the VVIX is only around the 103 to 105 area. People coming in and selling calls. Remember, 2 weeks ago, there was heavy call pressure, people coming in buying the 24s, 25s, 26s in October. Perhaps some of those customers are coming in and taking some of those off, collecting some profits on this first leg up in the VIX. That remains to be seen, but certainly people are thinking that the VIX range bound 16 to 20 is where they expect to see it for the next few months. That doesn't mean that we're not going to see a spike up to 30 or higher, but that does mean that's what customers are betting on. Behind me, of course. So like I said, we got the VVIX 105, we got the VIX 2060 on its high. The skew yesterday was a 114, kind of a low level on that. So people looking at the money volatility is where it's at. And of course, again, we're right now as I'm giving this hit, we're right now on the lows of the market. Not a lot of activity. I'm thinking the market is going to treat this as a new bearish trend. We're going to wait for the market to come up. I say we, but I think the traders are looking for a rally to sell into, just like in a bull market, they're looking to buy the dip. So I'll be watching that trend. If that holds below the 50-day moving average, I think that will be the trend.